Hi everybody, Marco Carvalho here from businesscreditbuilders.org. Today's video, we're going to talk about how to get business lines of credit with no revenue and how to get 0% financing on those lines of credit for up to 18 months. So if you're a brand new startup, you have no revenue coming in, this is the video for you. If you're an existing business with little to no revenues, this is a video for you on how to get lines of credit for your business. What we're going to cover in this video is not only what the banks look for approving you for these types of lines of credit, but we're going to share with you, most importantly, what mistakes to avoid before you actually apply for these types of lines of credit. Now, as you know, with many forms of lines of credit available for businesses, there's traditional lines of credit where banks mainly want to look at your financials, your tax returns. You may have to produce bank statements. And then there's other forms of lines of credit that are weekly repayment, bi-weekly repayment, which is more from fintech companies that offer lines of credit. And they want to look at your bank statements, or they want to look at your financials, may even run a business credit check. What we're going to talk about in this video is how to get business lines of credit that don't look at your revenue. They don't require that documentation. You could be a brand new startup. Also, they don't require tax returns or financials or anything like that. And most importantly is getting 0% financing, which traditional lines don't offer that, as well as fintech lines don't offer that, is 0% financing for up to 18 months. So what types of lines of credit are we actually talking about? Obviously, we're talking about business credit cards, revolving lines of credit. Now, I'm sure if you watched a lot of videos, we've done quite a few on business credit cards, but in this video, we're going to share with you some real good details for those of you when you're planning on applying for business credit cards. How do you ensure that you're in the right position? Why are you getting declined? Why aren't you getting approved for the right amount or a high enough amount? And how do you maximize that funding potential? And what mistakes should you avoid before you actually apply? So we're going to cover those details in this video. All right, so with revolving line of credit, you can, as you know, you can be a startup. You can have no revenues when it comes to getting a business credit card for your company. There's no collateral, and there's no financials required, no tax returns, no bank statements. And most importantly, many of the business credit cards available offer 0% offers. This is an introductory offer for you when you open up your card that you have 0% on purchases for up to 18 months. So one bank may offer you 0% on purchases up to 6 months, let's say. Another one may offer you up to 12 months, 0% financing. But this gives you access to be able to purchase, whether it's materials, inventory, maybe if you have to pull cash out from your cards, there's a strategy to utilize that 0% benefit there. But this gives you access to interest-free money for a long period of time, which is really, really exciting for you, especially if you're starting a business or you're looking to make a major purchase. All right, so let's talk about the benefits of business credit cards. Like I said, you get 0% financing. This helps you separate your personal and your business expenses. So when you're getting started as a business owner, obviously the key thing for you is getting set up. You incorporate your company. You can protect yourself from liability if you incorporate as opposed to being a sole proprietorship. But the next thing, of course, is getting an actual business credit card so you can separate your business purchases from your personal purchases. So if you're running your business right now and you're running everything through your personal credit card or you're using your own personal checking account to operate your business, you want to create that division right there, that separation. Why? Because first and foremost, this will really help you during tax time. Because when you file your tax returns, you're able to have a clear separation between where are your business expenses and what are your personal expenses. The next thing this helps you do when you're using a business credit card is this helps you build your business credit. This helps you establish a credit file that's separate from you as an individual. That's why it's important to separate your expenses. And with a business credit card, if you get the right kind, now keep in mind, you don't want to apply for business credit cards that report to your personal credit. You want to apply for business credit cards that report solely to the business credit bureaus, because this will actually help you build credit for your company, and this will protect you and your personal credit. So let's say you have a $10,000 business credit card and you put a $5,000 purchase on it. You have a $5,000 balance now on your business credit card. If that card only reports to the business credit bureaus, that debt you carry on that card is not showing up on your personal credit, so it protects you. But if you have a business credit card that does report to both business and personal, or also reports to personal, that business debt is going to impact you as an individual. It's going to impact your credit utilization. It's going to impact your ability to borrow more money. and it's going to impact your debt to income ratio. So all these things are important when it comes to creating a clear separation. So that's why the specific type of business credit cards you get, you want to make sure they only report to business credit. When you start establishing a credit-worthy company, what happens is less emphasis is put on your personal credit and more emphasis is put on the credit worthiness of your company. And that has to do with your business credit report. It has to do with the revenues and stability of your company, the age of your business. Those are all things that factor in. What's also exciting about business credit cards is you get much higher credit limits than you do as on the personal side. Banks tend to give much higher credit limits when it comes to issuing a business credit card compared to personal. And this helps you establish multiple banking relationships. So right now as an individual, if you have one bank account, you have one checking account, and you start a business, and then you also have your business bank account and your business debit card in that same bank, that's one relationship. What's important is for you to establish multiple banking relationships. That's why we encourage you to get multiple cards for your company, because each card that you have from a different bank is a new relationship that you establish. That particular bank card issuer may offer additional funding products, additional cards, and obviously you're more likely to get additional approvals in the future, provided that you have a good relationship with that bank, you're managing your credit responsibly, and you have a good credit score. So when you get a 0% intro offer card for your business, let's say it's 0% on purchases for up to 12 months. This gives you the opportunity to fund a large purchase for your company and have it interest-free for a period of time until that period runs over. At that time, when that period runs over, you can obviously pay it off, or you can utilize a balance transfer strategy and transfer to a 0% balance transfer card. And one thing I want to point out though, in the business credit card space, balance transfer offers are not very prevalent. What you will find a lot is 0% on purchase offers. Okay, so you want to be very strategic when it comes to getting a 0% purchase offer on a card, is utilizing that 0% period to the fullest maximum. So let me just kind of give you an example of how using business credit cards, it's a much easier debt to service as well compared to getting a loan, depending on what you're trying to do. So in this example, let's say you have a 0% card, one with 12 months 0% APR on purchases. You just got that one. You got a 0% APR for 15 months. And let's say you need to purchase $30,000 in total of equipment or inventory or whatever you need that money for. Well, during that 0% period, you have no interest you're being charged. And you have what's called a minimum monthly payment that is due on that balance. What's exciting during the 0% period is it's only typically 1% of the amount of the balance. So on the $10,000 balance on that one card, your minimum monthly payment is only $100. So that's a really easy payment to make on a $10,000 balance. What's exciting is during that 12 months, $100, that $100 monthly payment you're making, 100% of that is going towards paying down that $10,000 because there's no interest being charged to you during that 12 months. Okay, so that's called interest-free money, and every payment you make, your minimum monthly payment, is going towards paying down the debt. Now, obviously, if you want to make sure you pay this off within 12 months, you want to make sure you're paying more than a minimum payment, because every penny you're putting in there, a dollar, is paying down that debt. You'll see the $20,000 here, $200 minimum monthly payment. 100% of that is also going towards paying down that debt. Okay, but you want to be very strategic in doing this, and you want to use it wisely, because you understand is when that period runs out and if you still have that debt, then the regular APR is going to kick in. Okay, so that's why you want to have a strategy. Okay, at month number 10, I got to make sure I either pay this off, or I move this debt to a lower interest rate card, or I get a consolidation loan and pay it off. So that's where you want to be strategic with this. I also want to talk to you about what's important before you start applying for a business credit card, or if you decide to go through our business credit card funding program. There's things you want to get ready before you actually submit an application. So first, you want to ensure that you obviously have your business documents in place. You have your certificate of formation for your company or your articles of incorporation. The next thing you're going to want is your employer identification number and your certificate, which is a CP-575 document. This is a document that's issued to you by the IRS. When you incorporate your business, you get an EIN. They provide you this document. What's important though is you want to make sure right now, let's say you have your documents, you have your articles here, you have your EIN letter, you want to make sure your addresses all match up. They're all correct. There's no discrepancies there. So address right here on your EIN doc, if it's not correct, if it's outdated, and let's say you moved, you want to update that document. So you call this 1-800 number right here. And when you're speaking to the specialty line, you verify your address, correct your address, and when they do correct it, ask them to fax it to you. You need to provide them a fax number, or they're going to mail it to you, which can take quite some time. But if you have a fax number, they'll fax it to you. Let them know you're trying to get financing and you need this letter right away, and they'll send it to you right away via fax. But this is an important document you need to have, because when you're applying for a business credit card or a line of credit, etc., the bank may request to see your EIN document. They want to verify the business, the address, or let's say the EIN. So you have to be ready to furnish this document if it's requested. For our business credit card funding program that we have, we do want you to submit this document to us so we have it on hand when we're handling processing. Okay, so that's your employer identification number. You also want to make sure in your business structure documents that address is also correct. And in your state filing records, when you look up your company with the state you incorporated in, make sure your address is also updated and correct. You want to make sure you have your legal business name, everything spelled correctly, the year your business was started, your business information like your company address, your phone, your email address, and you can use your home address if you're running your business from home. We do encourage people to get a virtual office address that you can use separate for your business mailing address. Also want to make sure you have your industry type and owner's information. Many times with business credit card applications, they do require, if you have multiple owners, they have 25% more ownership, they may want to also run a credit check on that owner as well. So that may be a possibility with certain types of card issuers, but not all. The next thing you want to do is review your credit report. This is so important because we're going to go into details here in the next couple of minutes on how to analyze your credit report, things you want to look out for, what the banks look for in order to approve you, and how much they're going to actually approve you for. What we recommend is knowmycredit.org. You want to go to that website because this is a great website that allows you, it'll take you right here. That's knowmycredit.org. This is one of our partners. They'll provide you a 3-bureau report. And it's your actual FICO scores. It's not your Vantage scores. It's not your educational scores. These are your actual FICO scores. So they give you access to all 3 bureaus, all 3 FICO scores. And you can also get this every single month. It's $32 a month to monitor your credit. They have alerts, let you know if your information is compromised on the dark web, and you get identity theft insurance. So this is a really great service to have. You know your credit score range when you pull your 3-bureau report and scores. You're going to know what category you fall into. When it comes into business credit cards, typically you want to be in the 680 or higher range with at least 2 bureaus or more. That's very, very important. If you're in the 650, 640, most business credit card issuers are going to decline you in that score range. So you need to identify what's bringing your score down. Is your debt to credit ratio, your late payments that you have, a derogatory information, do you not have enough credit? So there's all these things that go into your credit score. Let's talk about the key factors, what impacts you getting approved for a business credit card before you actually apply. Like I said, FICO scores are very important. So that's number 1. The next thing is comparable credit. This is one of the biggest factors that we talk with our clients, potential clients as well, when we do consultations is how is it that some people get 100, 150,000 in business credit card approvals, but my projection is 15, 20,000, or my projection is only 30 or 40,000. I want 150,000. One of the major factors is called comparable credit. What do we mean by comparable credit? When it comes to business credit cards, banks will look at your comparable credit cards, which means your personal credit cards. You as an individual, you're applying on behalf of your company as a guarantor, you're the owner, let's say. They're going to look at how are you managing your personal credit cards. If you're applying for business credit cards in the bank size, they're going to assess and say if you're managing your credit cards in a positive way and you have large credit limits on the personal side, then you're equally more likely to manage your business credit cards the same way. Okay, that's called comparable. So when we're talking about comparable credit, we're talking about your primary credit cards. A lot of people utilize, say, I'll just add authorized users. I know some people have really high credit limits. I'll just make sure I get piggyback and get it on my credit report. Underwriters are smarter and they know that. They know they can see an authorized user. It says authorized user right on your credit report. Okay, so while that does help boost your score up, at the end of the day, underwriters look at your primary credit cards. They look at credit cards in your personal name, and they look at what bank issued them, what type of credit cards you have, how many do you have, All right, what are the credit limits on those personal credit cards? This is really the most important I have to say. The reason why is because if your highest credit limit on your personal credit cards that you have is, let's say, $5,000, and you compare that with an applicant who has a $30,000 American Express card as a personal card, which one shows they can manage higher credit limits? The one with $30,000 or $5,000, right? So you can't expect a bank to approve you for a $30,000 business credit card if you never manage that range on the personal side. Okay, so that's what we're talking about, comparable credit limits. Also, the age of the card. You may have some good credit limits, but did you just get it a year ago, a year and a half ago? So that's very new credit. That's not a bad thing. It's just they like to see seasons. They like to see 5 years or more of credit history at least. But that doesn't mean you're not going to get approved. Just keep that in mind. But it's a factor that gets weighed in when it comes to you getting approvals on the business credit card side. They look at the type of cards that you have on the personal side. So you may say I have a $20,000 jewelry card, all right, but doesn't count. It's not a major credit card. All right, so is it a department store card and not a credit card? So when we're talking about credit cards, we're talking about Visa, MasterCard, American Express, or Discover cards. They also look at your ratios. What's your credit utilization on those cards that you have? What's the individual ratios on those cards, and what's the total credit utilization that you have? Let's say you have a $10,000 credit limit and you owe $8,000 on the card, you're 80% utilized on that card, which means you're almost close to the limit, you're almost maxed out, which is not healthy. What if you had a $10,000 card and you only owed $200 on it? Okay, you have a very low utilization. You're hardly using this card, which is good. It shows you're managing your credit responsibly. Okay, so those are the things they look at when it comes to comparable credit. Payment history is another thing. If you have any late pays, that is a factor, especially if they're credit card or mortgage related. That can hurt you tremendously. All right, so you want to address those late payments if you have any. Your length of your credit history is another important factor, and credit utilization ratio, like I talked about, your individual and overall. Typically, you want to be under 50%, and it's always good to have a couple cards at zero balances. So if you have 5 cards and all of them have balances, that's not a good thing. You want at least a couple of them to have zero balances, because when you have all your cards with balances, that shows that you're stretched out. And I'm just telling you, this is what the banks look at. It's more favorable if you have, let's say, 5 cards and 3 of them have zero balances, and the other 2 that you have a low utilization ratio, let's say 30% or 40%. Okay, so those are things you want to consider. Your new account activity is another big factor. Is if you open a couple new accounts recently, let's say you got an auto loan last month, you open up 2 credit cards, and you got a mortgage 6 months ago. That's activity. That's a lot of recent activity. All right, in the bank size. All right, so you want to be really strategic when you apply. So don't go and apply for multiple cards and then, let's say, come to us and say, I want to get more, even though I just opened 3 or 4 cards 4 months ago or 5 months ago. That's too much activity. So be strategic with your inquiries. The next thing is your existing relationships that you have with the bank. That can also weigh in a factor that's important when you're applying for a business credit card, and if you have a business credit file established. Now, this is not mandatory with the majority of business credit cards. You don't have to have a business credit file, but it does help because many credit card issuers will run a business credit check in addition to a personal credit check when it comes to approval. One of the things I want to talk about that we talk about comparable credit is the main thing is credit limits. The size of your personal credit card limits are going to play a big role in determining how much you're going to get approved for on the business credit card side. Your credit limits can play either a positive factor when it comes to you getting approvals for business credit cards, or it could be a negative factor. What do I mean by that? So the smaller your credit limits you have on your primary credit cards, the less in credit limit approvals you're going to get as far as the size of them on your business credit card side. Let's talk about what can you do before you actually apply for business credit cards. So what I encourage you to do is, if you look at your primary personal credit cards that you have right now, look at your credit limits. How long have you had them? When's the last time you requested a credit limit increase? Now, it's important to realize, have you been using those cards? All right, because before you request a credit limit increase, they're going to look at your account activity. Have you even been using these cards? Does it justify you getting a credit limit increase if you haven't been using your credit card? So usage is one important thing. The next thing is how much you actually owe on those cards before you request a credit limit increase. You don't want to be maxed on that card at all. You don't want to have late payments on that card before you request the increase. But by increasing your credit limit before you actually apply for business credit cards, that's going to increase your ability to get maybe a higher approval on business credit cards. What's important though is when you request a credit limit increase, and let's say here you have a $2,000 Capital One, they approved you for an increase to a $3,000. So now you have a $3,000 limit. Same thing with BofA Discover. They've increased your limits from 3 to 4 to 5,500. You now have to have a little waiting period for those new credit limits to update on your credit reports before you actually start applying for business credit cards. Okay, so that's what's important. You need to wait for those new adjusted limits to report. I want to share with you a couple of bullet points before you request a credit limit increase. Like I said, 6 months of good account history before you request that. Your credit card activity is important. If you haven't been using this card at all, you can still request it, but it's going to be tough for you to get approved because there's no activity. You want to make sure your credit's in good standing, a lowered credit utilization ratio. So what that means is you don't want to request a credit limit increase when you have a high ratio of maybe 80%, 70, 90%. All right? And you want to request a credit limit increase if, let's say, you had an income change. You're now making more money than when you applied for the card. So in your account with your credit card company, they usually ask for your annual income. You can update that annual income. So if you got a pay raise, you want to update that first, and then you can request a credit limit increase and reflect and have them do a re-review for a credit limit increase because now you have higher income. Or let's say you paid a debt off, you paid a mortgage off, or you paid a car loan off. So that's another reason why you can request a credit limit increase. But what's important is before you request it with your primary credit cards, make sure they do not pull your credit via hard pull. Okay, you don't want to sacrifice a good hard inquiry for a credit limit increase. So make sure they do a soft pull or they just do account review. So you want to make sure of that. I want to talk about what factors to avoid. What are some things that are going to trigger some declines when applying for business credit cards? Now, obviously, a low FICO score, if you're in a low score range and you're applying with a bank card issuer that, let's say they would want to see you have at least a 700 plus credit score for this particular executive card and you're applying for it and you have a 660, they're going to decline you just based on your score alone. So it's important when you're applying for a card, you want to know what's the minimum FICO score when applying for this particular card. What do they look for? Late payments past 24 months. So if you've had any late payments on credit cards or mortgage in the past 24 months, that can automatically trigger a decline. All right, doesn't mean you're going to get declined for everything, but it does play a factor in not only approval, it also factors into how much you're going to get approved for and what they're going to actually offer you when it comes to how long your 0% period, if any, is going to be. Something that could trigger a decline is multiple inquiries. So if you had multiple inquiries in a short period of time, the most I've seen, I think I've seen 60 plus inquiries, hard inquiries on a report, and that's extreme. But you can start getting declined for business credit cards if you have 3 or more credit card inquiries in the past 90 days. That could happen. So you want to be very strategic in your inquiries when applying for credit. And multiple accounts opened recently. That's another thing that can trigger a decline. So remember, if you just got approved for a personal loan, you got approved for let's say an auto loan, and you got one new credit card all within the past 30 days or 60 days, you want to give some time for those to age a little bit before you start applying for a second, third, and fourth card. All right, so multiple accounts can really trigger a decline with some bank card issuers. Unpaid collections. Now, is it better to have an unpaid one or a paid collection? It's always best to have a paid collection rather than an unpaid collection on your credit report. So that can trigger a decline. Now, another important thing is limited credit card depth. This is something we see a lot is you can have a 700 plus credit score, but you only have one credit card. That you only have one primary credit card and a low credit limit, let's say of $2,500. So your comparable credit is too thin. It's too little. If you have 2 or less primary credit cards with low credit limits, more than likely that can trigger a decline because you have limited credit, limited depth. And that's why, like I talked about, comparable credit is a very important thing. If you have 2 or less primary credit cards with low limits, how long have you had those cards? And if your credit limits are, let's say, $1,000 and you've had them more than 6 months, try to get those credit limits up to $3,000 or more, all right? Or even bumped up to $2,500. All right, so that's what I talked about, increasing your credit limits on the limited cards that you have. Now, bankruptcy in the past 7 years is something that can decline you automatically. Some specific banks will automatically decline you if there even is a bankruptcy on your credit report. All right, so those are more of the higher tier business credit card issuers. So you don't want to apply for those type of card issuers that automatically trigger declines from bankruptcies reporting. Now, the next thing is a high credit card utilization ratio on your individual and overall. That's something that can trigger a decline on your credit card application. So these are all factors that I want to share with you that are very, very important, and you want to avoid the hit and miss approach. This tends to happen quite a bit is let's say you have a 680 credit score and say, I'm going to apply for 3 or 4 cards, watch a couple of YouTube videos, and I'm going to apply for about 4 or 5 cards. You get approved for one, then the second, third, and fourth you get declined. You have no reason why, and then you come to us and say, hey, can you get me some cards? By then, you have too many credit card inquiries, we can't help you. Okay, so you want to avoid the hit and miss approach when it comes to applying for business credit cards. How do you do that? You want to be strategic in the way and before you actually apply for each card with each bank. So you want to determine which banks, number one, which bank should you apply at, which particular cards are you most likely to get approved for. Remember, there's higher tier business credit cards that require much stronger credit limits compared to more starter business credit cards. So you want to make sure if you have limited depth on your credit, you have a 680 score, but you don't have a lot of comparable credit, you don't want to apply for a high tier business credit card that requires 800 plus or 700 plus credit scores and really excellent credit. Okay, so you want to be strategic in which card you apply for, and what's really important is the order in which you apply. Now, what's fascinating is the order in which you apply for these business credit cards are going to make an impact on whether you get approved or declined. There are certain bank card issuers that will automatically trigger a decline if they see an inquiry from a competitive bank. All right, so that's where you want to be strategic in the order in which you apply. Now, the next thing is which credit bureau does that actual business credit card issuer pull from? That's what I mean by being strategic. If you have a strong Experian score but a lower TransUnion score, it makes sense to apply with a card issuer that will look at your Experian report compared to your TransUnion report. So do you know which credit bureaus do they pull from? And also, other key factors is the location you're at. Certain banks will pull from Experian based on where you're located at, or they may pull from Equifax, or let's say TransUnion if you're located in different regions. The age of business is how old your business is. This is a factor that weighs into how much they're going to approve you for, if they approve you for, and the industry you're involved in. These are all factors that you, when applying for business credit cards, if you really want to maximize your opportunity for how much you get approved for, who you get approved for with, these are all things that take in consideration. Now, one thing I want to talk to you about is a business credit card called Signify Business Cash Card. You can apply for this particular card. I just want to give you a couple data points on this particular card because it's fairly new. And for those of you who are looking for a business credit card with 0% APR for 12 months, this just came out not too long ago. There's no annual fee on this, unlimited rewards. You get a $500 cash reward bonus. If you spend $5K in the first 3 months, this does report to the Small Business Financial Exchange, and your minimum credit limit is $2,500. The requirements for the Signify Business Cash Card is you can apply online or in person. You have to have a Wells Fargo checking or savings account. You want to make sure that account is open for at least 60 days before you actually apply. Because if it's any earlier than that, they'll automatically decline you. So this is one factor you want to look out for. They do run a personal credit check at Experian, depending on where you're located at, or an Equifax pull. Now, they do want basic information on anyone owning 25% or more in the business with this particular card. They do require a personal guarantee, and this does report to business credit bureaus only. This reports to SBFE, like I mentioned. So as you know, I just covered quite a bit of information as far as data points of what to look out for when you're applying for business lines of credit that have even if you have no revenue, that offers 0% financing. So to take the guesswork out of it, what if you're looking for someone to do that work for you? You want to improve your chances of getting the most funding possible. We offer a done-for-you business credit card funding program. We can acquire up to $175,000 in unsecured business credit cards and approvals for you. This gives you the opportunity to 3x your amount in total approval limits by using our process. Now, what I mean by that is if you look all those factors that I talked about in this presentation, those are things that we utilize when it comes to creating a bank list for you, completing your application, submitting it for processing and approvals. So this gives you the opportunity to ensure that you're going to get the highest approvals possible, the best 0% offer, and only getting business credit cards that report to the business credit bureaus. You get 0% introductory APR on purchases for up to 18 months. Those are specific types of cards we acquire for you in our service. You do have to have a minimum 680 FICO scores on 2 or more bureaus. Doesn't report to personal credit, and this helps you build business credit. This is called a no-doc program. Our funding process is really fast. We're done in 14 to 20 days. So we don't take an entire year to get you business credit cards. We don't charge anything up front when it comes to acquisition. Ours is a success-based service. We only get paid on approvals only. So we're very incentivized to get you the best approvals, the highest limits possible. So if you want to pre-qualify, you want to go through and see how much we can project we can acquire for you, you go to businesscreditbuilders.org, and that's going to take you to our website right here. All right, so all you need to do is click on this pre-qualify now tab, and that's going to take you to this pre-qualification form. This is a short form you fill out. You just tell us a little bit about your business and yourself, and you're going to upload a recent copy of your credit report. We're not doing a hard pull on your credit for this review. You're supplying us a copy, and that's where I mentioned going to Know My Credit to get your 3 bureau report and scores. You're going to upload your report securely, and then we conduct the review. It takes about 48 hours for us to contact you back and give you funding projections. We'll provide to you the amount of funding we project we can acquire for you over the 14 to 20 days. And then if you want to get started, we send you out the funding agreement, and the acquisition time is done in 14 to 20 days. And so that's our process. I hope you found this information useful. Give us a thumbs up if you found it valuable. And with that, make it a great day, and we'll talk to you real soon.